Welcome to the Moving Markets Podcast. My name is Jeffrey Dunyan. I am the host of the podcast. If you haven't joined us before, just making a quick introduction. I am the owner and founder of Safe Option Strategies, and that is our sponsor for today's episode of Moving Markets, Safe Option Strategies. Check us out at sostrades.com and learn how we protect ourselves in a very volatile market and stay profitable and figure out a way to navigate things without the stress that trading can sometimes bring about. This is probably going to be kind of a short podcast. If you've been with us before in the podcast, you'll recognize a different background behind me. I am at my daughter's house in San Francisco, California today. She and I are driving back to Utah tomorrow. I flew out here this morning so that she didn't have to drive herself. Her husband's going to fly out later in the week and join us for the 4th of July holiday. So that's why you've got a little bit of a background. I'm sitting in the spare bedroom at my daughter's home. Kind of a short podcast today, but there's three things that I want to talk about from last week and from the weekend, how they might affect the markets going forward, and then a little bit about what's going on this week in terms of what could happen with the markets. Last week, Jay Powell gave testimony before some different congressional committees, the Banking Committee, Finance Committee, and we talked about last week in the podcast that Powell was going to do that. We talked about how in the Fed rate hike decision from the week before, he came out a little bit hawkish. The market had a really big rally one day and then kind of turned over and started to sell off the next day. And then all last week, that sell-off continued. First losing week, I think, for the NASDAQ in 7 or 8 or more weeks, first out of 4 or 5 losing weeks for the Dow and the S&P. And today that trend continued. The markets today, Dow finished down just a fraction, 12 and almost 13 points down. That's not really a big, huge sell-off. That's not too bad. S&P finished down about 0.5%, down almost 20 points. And the NASDAQ finished down 1.16%, which is almost 157 points, 156 and some change. The NASDAQ has been the most profitable of the three major indexes. It's been up over 30% in the first half of the year, and it's just coming back down to earth a little bit. The S&P is the broader market. That's the one that we watch a little more closely, the one we pay a little more attention to, and it was kind of ripe to roll over and sell off a little bit. When Powell spoke in front of those congressional committees and Senate committees last week, he stayed on message. I've not been overall a big fan of Jerome Powell, but I might be turning myself. I might be becoming a little bit of a fan of Jerome Powell, simply because after he really botched it, in my opinion, and really blew it on the transitory inflation thing. You remember, for a year and a half, we were told by everyone in the administration and Jerome Powell, who's technically not a member of the administration, but might as well be, we were told that inflation was going to be transitory and nothing to worry about. It would poke its head up a little bit and then it would go away. Well, we know now that was a lie. That was, and I'm not saying it was a mistake. It was a lie. It was calculated. It was deliberate. It was conceived. It was just plain and simply a lie. Everybody with half a brain and some with less than half a brain knew that inflation wasn't going to be transitory, that it was going to be around for a while. And yet they continue to push that line on us. That made me very unfriendly in my thoughts about Jerome Powell. I'm not going to say I'm becoming a fan of his, but I appreciate for the past year that as he's raised interest rates repeatedly, with the exception of the pause that happened a couple weeks ago, he has stayed on message. He's telegraphed what he's going to do, and then he's stayed true to what he's going to do. And in that congressional testimony he gave last week and the questions he took, he once again stayed very true to that. He kept on message. He continued to talk about the fact that inflation is still at 4.7, 4.6%, and he wants to get it down to 2%. And that's a long ways to go. It's great that we're not still up at 9%. It's great that we didn't stay there very long. It's great that we're not at 8% or 7%, but we're still at almost 5%. And I think there's a real possibility that over the next few months, we get a tick back up a tenth or 0.2% in some of those inflation numbers, and we get back up to 5 before we continue that march down. So, and I think Powell's aware of that, and I think he's being more truthful about it now. I think he recognizes that he cannot continue to spout a nonsensical line about certainly about something like transitory inflation, but I think he's being more truthful about what the Fed has to do to keep things in check and to move things in a positive direction for the economy. So I found, like I said, I'm not going to go so far as to say that I am becoming a fan of Jerome Powell, but I am more appreciative of what he's done in the past year than what he did for several years before that. The second thing I want to talk about in this week's podcast is the situation at the White House, and specifically with the Biden family and the mounting evidence that there is serious corruption that has gone on there in the past and continues to go on there. And I'll repeat what I said last week. It does not really matter to me what your politics are. It doesn't matter to me if you're conservative, if you're liberal, if you're a strong Republican, a strong Democrat, if you're independent, if you're libertarian. I could care less about any of that. There is so much smoke now that the idea that there's not a fire that's causing it all is just ludicrous. 2 more whistleblowers testified towards the latter part of last week, and one of them basically turned over a document of a WhatsApp conversation which is an instant messaging. For those of you that might not be real familiar with WhatsApp, it's an instant messaging platform that's used internationally a lot. It's used a lot to trade messages with people in foreign countries that may not be on the right kind of a network or may not have an iPhone and can do the Apple messaging. WhatsApp is a very popular message that's sort of a little easier to use internationally. You've got Hunter Biden telling a Chinese billionaire, member of the Communist Party, member of the political system over there, saying, I'm sitting here with my dad. You better follow through on what you said you were going to do, or there'll be consequences. And you now and okay, that may be somewhat circumstantial in nature, only to a degree. I mean, anybody could say I'm sitting here with my dad, and their dad's not really in the room. A transcript of a text messaging conversation doesn't outright prove that you were in fact in the room with that person at that time. It certainly makes it suspect. You have to give a little credence to it. But there's now forensic evidence that within a few days of that conversation, $5 million was wired into one of the many LLC accounts that the Biden family set up. I mean, if it were anyone other than a Democrat president that was being accused of this, they would be in jail waiting for the evidence to play. There's more than enough evidence to go out and arrest someone for fraud and corruption and treason and money laundering and selling political favors. I mean, to me, that's basically treason when you take money and you're doing it to sell political favors to another country, especially a hostile country like China. I mentioned last week in the podcast that so far, the revelations coming out about Hunter Biden and about Joe Biden's involvement are not affecting the markets up to this point. There could be a turning point coming. And again, I don't care what your politics are. You got to be aware that there is a possible turning point coming in the politics of all this, in the way it could affect the market. If today in a press conference, Karine Jean-Pierre, the White House press secretary, got hit with some questions about President Biden and about his business dealings with Hunter and about whether he's been honest with people about that, what's going on. And she's as habitual a liar as any human being you will ever meet. She lies. If her lips are moving, chances are she's lying to you about something. I really believe that. She's masterful at it. Actually, I take that back. There have been people way better at it. She's pretty transparent about the fact that she's lying. It's easy to see. I don't mean transparent in her being forthcoming. I mean it's just easy to see through all the BS that she tries to spin from that podium. But I noticed with some questions that she got at the end of last week and today, a few people outside of Fox News and conservative public radio are starting to wake up and pay attention. Now, MSNBC will never get there. They're simply a Democrat Party arm. ABC, CBS, NBC are going to be really slow getting there. CNN, you almost started to think they're going to report some real news, and then they fired the guy that was helping them get there, and they may or may not. But you're starting to see a little bit of a shift. You're starting to see a few non-conservative reporters that are saying, hey, there's enough here that we at least have to ask some questions. There's a major lack of true journalism in this country right now, and it saddens me that that's the case, but starting to see a little bit of a turn there. So you got to keep an eye on it. And for some, it might be something that you laugh about and say, oh, nothing's ever going to stick to him because it's all made up. Other people are saying, I can't believe all the corruption this guy's gotten away with. A lot of people are in the middle saying, hey, we'll sit and wait and watch and see if the facts bear anything out. But you got to pay attention to it at the very least for what it could do to the markets. If you get more of the media that turn a little bit, and not turn necessarily on the administration, but become willing to ask tough questions. If that starts to ramp up a little bit more, if generally the country starts to get a feel that this president is in trouble and this presidency is in trouble, it'll rock the markets, it'll shake things, and you'll see a big sell-off in the markets. Last thing that I wanted to talk about on this week's podcast, you've got this Russian warlord that has a private contracting company, contract security company, that was basically marching on Moscow. He was coming after Putin. It looked like a possible coup d'état. It looked like potentially an overthrow of the current Russian government. And then it got kind of squashed. Belarus stepped in and claims to have negotiated some kind of a peace deal between the two parties. Now this warlord is going to go to Belarus and have some asylum there. The reason I bring this into the podcast today is because Russia provides a lot of oil to the world, and the fact that we were not more assertive in cutting off all Russian oil, the fact that we let the Nord Stream pipeline thing go through, the fact that we didn't sanction Russia more heavily when they went into Ukraine and made it near impossible for them to sell oil to anyone, is what's fueling and funding the war in Ukraine. If we and then the biggest thing is we turned off our own spigots. We basically hamstrung ourselves in the U.S. in terms of oil exploration and production. A few short years ago, before Biden came into office, we were a net positive producer of oil, meaning we were selling more oil to other countries than we were having to buy from other countries. We were producing more than what we needed for ourselves. And oil prices were way, way, way down. Biden, from a pure policy standpoint, personal politics aside, whether I agree with him philosophically on things or not, the most insanely stupid thing that man did was the day he took office. He attacked U.S. oil production with regulations, with stopping the Keystone Pipeline, with other attacks on the oil industry, and we are no longer a net producer of oil, plus producer of oil. We are back to being dependent on other countries for the amount of oil that we need. And prices have gone way, way up. They're down a little bit from their peak, just like inflation is down from its peak, but it's still really high. And the higher oil prices are, the more money Russia has, period. End of story. If oil prices are higher, Russia has more money. They're funding the war in Ukraine because of high oil prices. If the United States opened up the spigots and we started producing as much as we're capable of producing, oil prices would go way down and Russia would be out of money. They wouldn't be able to stay at war in Ukraine. The reason this Russian warlord going after Putin is a big deal for the markets is the more turmoil that happens in Russia and at the Kremlin, the more chance there is of the world oil supply getting upset and prices going up. And that affects markets. So you got to pay attention and be aware of these things. One last thing I want to talk about. This week is not a real heavy week as far as economic events that are going to move the markets. There are some things going on, but I think the biggest thing that we've got to watch as the week goes on this week is going to be we've got to pay attention to the PCE numbers and the consumer sentiment numbers that come out on Friday. Now they come out in the morning, so whatever happens before Friday could get flipped on its head and reversed because of what happens on Friday. But I don't think you've got wholesale orders, you've got durable orders that come out tomorrow and Wednesday respectively, pending home sales, jobless claims on Thursday. Those are all important things. You do get the third reading on first quarter GDP. If that number is down on that third reading on GDP, just an adjusted number from the first couple of quarters, or from the first couple of readings, if that number is down, there's going to be more talk about us going into a recession. So there are some economic events and announcements that are going on this week that could possibly move markets, but it's going to be that PCE. That's the biggest inflation. It's what the Fed look. The word is slipping me. It's what the Fed looks at the closest as an inflation indicator. Last month, that number is what came in at 4.7%. The consensus for this month is that it's going to come in at 4.7%. I think that would actually be a bad thing if it stays right at 4.7 and there's no downward movement on that. I think the markets are going to perceive that as bad news and sell off bigger on Friday. If it's lower than 4.7, it's going to have to be like a 4.5, 4.4, 4.3. I think you could see it tick back up to 4.8 or 4.9, and that would also spell really, really bad news for the markets. So watch that core PCE number close on Friday. Now, by that time, most of the week is gone, but if you've had a bad week up until then, it could flip it upside, it could flip it right side up, and the markets could recover and rally nicely. If you're having a good week, that's something that could flip it on its head. If you're already having a bad week, it could make a bad week worse. So really got to watch that PCE number that comes out on Friday. And then, of course, we're going into a big holiday weekend, 4th of July weekend. With 4th of July on a Tuesday this year, you're going to have the markets open on Monday, closed on Tuesday, and then resuming trading. In fact, I'm going to double check here. Market schedule for holidays. There might be a partial trading day on the 3rd. I'm trying to look it up right now so I can just basically tell you what it is. I'm suddenly not remembering if there's going to be a partial day on the 3rd. Here we go. Here are the dates. No, regular trading day all day Monday the 3rd. The markets will be closed on July 4th, and then there's not a closure again of the markets until Labor Day on September 4th. So have that to look forward to. A shortened week next week, but not like a real long holiday week, and it's kind of just splitting up the week. So, all right, I'm going to wrap it up right there. Thank you for joining me on Moving Markets Podcast. Make sure you tune in each week to hear our take on what the markets are doing. This has been sponsored by Safe Option Strategies. Check us out at sostrades.com if you want to learn how to trade safely in the markets, or more safely than most people do. Grow your portfolio without ever putting a lot of it at risk. That's what we specialize in teaching at Safe Option Strategies. We'll be back next week on the 3rd, even though the next day is a holiday. I'm just going to be spending that holiday weekend at home with my family. So we'll be back on the 3rd for our next episode. Thanks, everybody. Have a great day. Bye-bye.